Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best undervalued stocks to add to your portfolio right now. We will be analyzing this Forbes advisor list from the professionals over at Bank of America to determine which are the best undervalued stocks to add to your portfolio. So for more videos just like this one, don't forget to go and obliterate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, I say let's jump right into today's video. First, we're going to start off with Ameriprise Financial Inc., ticker symbol AMP. This company is a very diversified financial services firm that provides insurance products, annuities, wealth management, as well as asset management services. Now, you may be wondering, what about rising interest rates, and how come this rise in interest rates have not affected this company? Well, interestingly enough, for various financial organizations, a rising interest rate environment has actually boosted their financial services net interest income overall, and especially their overall earnings. That's why professionals over at Bank of America rate this company as a buying opportunity right now, and a price target for the company of $430 over the next 12 months. So, if you need more exposure to financial institutions that are undervalued right now, or an organization that is benefiting from the rising interest rate environment we find ourselves in, then this could be the company for you. Up next, we have CF Industries Holdings Inc., ticker symbol CF. This company is a gigantic North American nitrogen fertilizer company that focuses on production and distribution. The reason this company particularly is on the list is not only do they have amazing accounting ratios, such as a price-to-earnings ratio of only 4.4, a price-to-book ratio of 2.8, and a price-to-sales ratio of 1.3, which are phenomenal, but also due to the war over in Ukraine. Thanks to the war in Ukraine, this has disrupted the global fertilizer supply for the years of 2022 and 2023. Therefore, since supply is constrained, demand has increased, and it has also increased the overall price of companies just like CF Industries. There's also amazing catalysts coming up for this company because there's going to be an increase in the United States making corn, which is going to need a lot of acreage as well as fertilizer to produce, and there's going to be quote-unquote favorable farm economics that should trigger a positive inflection in nitrogen prices over the coming months. Therefore, not only is this company undervalued and the demand for their overall products is radically increasing, but the company is also posting very positive free cash flow year over year, and this is anticipated to continue well into 2025. That's a reason why a Bank of America expert has a buy rating on this company and a price target of $115. So, for more exposure to a very undervalued company, don't forget to go and look at this company, at least for a short-term play. Up next, we have Exelon Corp., ticker symbol EXC. This company operates a utility company that specializes in regulated electric gas. So they are a giant utility business that serves more than 10.5 million customers. This particular company is trading at a giant discount compared to their overall peers, which is going to provide value for you as an investor. Right now is an attractive entry point to pick up some of these shares because this not only is going to be a good stock to hold for the long term compared to their competition, but this is also going to be a defensive stock which is going to add not only value, but overall stability and resiliency to your portfolio. That's why Bank of America professionals believe this company is a buying opportunity right now, and they give this company a $47 price target for the future. Now, there is something I want you to be aware of, because in regards to utility companies, we do need to be careful because these trends could get disrupted further in the future once the political, macroeconomic, and geopolitical environment start to calm down. But besides that, right now it looks like this company is pretty undervalued according to their overall PS ratio, because the lower their price to sales ratio, the better buying opportunity this company could be, and it indicates to us that this company could be undervalued. So if anything, always make sure to do your own research on this particular company. Up next, we have Nucor Corporation, ticker symbol NUE. Nucor is literally the largest United States mini mill steel maker, and it's also a very diversified business over in North America. The demand for steel has increased dramatically thanks to the radical increase of overall automotive companies that we find on the market right now. However, they also give their steel to energy and construction industries, and this trend is supposed to improve throughout the year of 2023. Clearly, it's going to take a lot of steel and metal to produce vehicles vehicles, automobiles, construction equipment, and even produce energy in some instances, or at least make machines that will produce energy. Nucor has committed to return at least 40% of their net income to buy back their shares. So this company is extremely confident in their overall price predictions of the future, meaning that they are willing to buy back shares at today's price because they believe the company's future share price will be far greater. This is also going to help support their overall earnings per share, and fundamentally, according to accounting ratios, this company is very solid. That's why it's on Bank of America's top 10 value companies list, and they give this company a buy rating with a $190 price target for this stock. So this is one of the companies on this list that I'm very excited about, not only from a value standpoint, but also a future growth standpoint, and it's also going to be able to make your portfolio more resilient during these uncertain, volatile macroeconomic times. Up next, we have NVR Inc., ticker symbol NVR. NVR, if you're not familiar with this company already, is one of the largest United States home builders. Now, as of late, we have seen rising mortgage rates, which is negatively impacting companies such as NVR, but this is when true competitive advantages come out. And thanks to the way that NVR has navigated this overall downturn due to rising interest rates in this particular space, it has put them ahead of a lot of their competition. In fact, NVR took advantage of this rising interest rate environment and has actually used this as an opportunity to gain market share and steal market away from their competitors. Another catalyst for this company is that they are also focusing on expanding over into new regions. This is why they are on this particular list and why Bank of America has a buy rating for this company and a $6,000 price target. So if you want some exposure to this particular company, feel free to look further into this company for yourself, or at minimum, add it to a watch list. Up next, we have Principal Financial Group Inc., ticker symbol PFG. Principal Financial Group is clearly a financial services company, and they specialize in insurance, retirement, and investment services. The company finished out the year of 2022 with almost $430 billion worth of assets under management. So clearly this is a huge company. On top of that, their overall accounting ratios are very impressive, and they project a 9.6% earnings per share growth throughout the year of 2023. And for a value company, this is a very impressive growth. Bank of America analysts are obsessed with this company, and that's why Bank of America has a buy rating for this company and a $100 price target, which this company could easily achieve over the next few months. Next up on our list, we have a company that is very special. So you might be looking at their earnings per share ratio, which is rather high at 70, and wonder why it's on this list regarding companies that are undervalued. Well, the reason why they are on this list is that not only is T-Mobile one of the largest United States wireless carriers, comparable to both Verizon and AT&T, but this company has snuck its way into both the top 10 growth companies by Bank of America, as well as the top 10 undervalued value companies by Bank of America. This company is very interesting because although they have a very high price to earnings ratio, they have a very low price to sales ratio, making this company not only phenomenal in terms of their overall future growth, but also in their overall value. T-Mobile is uniquely positioned to achieve growth catalysts over the next few years. They are extremely well positioned to exceed their overall projections, guidance, and forecasts from professionals, and they are anticipated to max out their current share buyback program and announce a new one sometime in 2023. Again, we have another company that's so confident in the future that they are willing to buy back shares at today's prices because they believe that the future share price is going to far exceed the current share price. So they are literally putting their money where their mouth is and doubling down on their own success. Bank of America clearly loves this company because not only is it on their top 10 growth companies list, but also their top 10 value companies list. So clearly they have a buy rating for this company, which they say this company could achieve a $170 stock price target over the next 12 months. But just like T-Mobile, we have another company named United Rentals Inc., ticker symbol URI, who is also on both Bank of America's top 10 growth companies list as well as their top 10 value companies list. This makes it a very good investment to add to your portfolio because not only are you getting stability, but you're also getting phenomenal growth. United Rentals is literally the world's #1 largest construction and industrial equipment rental company. And to make this an even hotter stock, they recently implemented their first dividend. So not only are you going to get phenomenal growth out of this company, but you will achieve passive income in the form of dividend payments. Bank of America analysts go crazy for this company, which is why it's on both their top 10 growth list and their top 10 value companies list. So clearly Bank of America professionals have a buy rating for this company, and they believe this company should be worth around $450 by the end of the year or over the next year. So clearly this is going to be one of the better companies on this list to take a look at further, so you can decide whether or not it's good for your personal portfolio, because I understand that everyone has a different risk tolerance, different variables, and we're all at a different stage of our investing journey. Just remember not to overexpose yourself too much to any of these singular risky growth stocks. The majority of your core holdings should be, in my opinion, invested into index funds, mutual funds, and ETFs, but I have plenty of videos on those as well, so feel free to look that up after this video. Up next, we have an interesting pick by Bank of America that I found intriguing, which is Warner Bros. Discovery, ticker symbol WBD. Warner Bros. Discovery is a leading media company, and it's the parent company of Warner Bros. They operate both Warner Bros. TV and movie studios, HBO, CNN, and other entertainment brands, which all fall under Warner Bros. Discovery. Bank of America is extremely bullish on this company due to their long-term growth potential, and they also believe this particular stock has many catalysts ahead of it thanks to their overall company, including a launch of a streaming service and a recovery in the overall advertising market. Because as the economy starts to bounce back, we are going to see an increase in the advertising market, and once this company releases another streaming service, this should add to their overall revenues and overall fundamentals. That's why Bank of America has a buy rating on this company and a $21 price target for the next 12 months. Next up, let's talk about Western Digital Corp, ticker symbol WDC. This company designs and manufactures storage solutions for data centers, mobile devices, and personal computers. You probably aren't aware of Western Digital, but I hold this company in my personal portfolio. They are inexpensive according to professionals at current levels, which I 100% agree with, which is why I have recently added to this company, mainly due to their overall value. In my personal opinion, they are undervalued. Just look at their price to sales ratio coming in at 0.8. Their price to book ratio coming in at 1, and their earnings per share is going to be not applicable. That's why I believe this company is an attractive long-term buying opportunity, which means that me and Bank of America professionals are in agreement for this particular company. But Bank of America has a buy rating on this particular company and a $50 stock price target. There are so many great undervalued companies that are on this list, and I just want to make you aware of them. So if you found any value in this video, don't forget to go and annihilate that like button right now. Comment your thoughts down below, subscribe if you are new, and I'll see you in the next YT video.